In vendor master, now we can go for purchasing. Under the purchasing, the first topic, purchasing data. Under the purchasing data, the first field, purchase order currency. What is it? Purchase order currency is the currency in which the PO is issued to the vendor. PO is nothing but purchase order. This currency controls how prices are entered, how calculations are done, how the vendor is paid, where it is appears. You can see it in vendor master, purchasing data, purchase order header, and conditions in pricing. If the vendor master, this currency is usually a default value, but it can be changed at PO level. Function, the purchase order currency determines the currency used for item prices, currency for taxes, discounts, freight charges, value posted in SAP MM, foreign currency conversion if different from company code currency. Example, the company code currency is INR, the vendor currency is US dollar, PO is created in US dollar, item priced in US dollar, SAP converts US dollar to INR during posting using exchange rate. If vendor is domestic, PO currency is usually the same as company code currency, example INR. If vendor is foreign, PO might be issued in foreign currency such as US dollar, euro, Japanese yen, British pound, like that. SAP then uses exchange rates to convert values from this different currency to INR. The very simple meaning, the purchase order currency tells SAP in which currency the PO is created and the vendor will be billed. The next field is terms of payment key. What is it? The terms of payment key defines the payment conditions agreed with the business partner. Here business partner is nothing but vendor or customer. It determines when payment is due, cash discount eligibility, installment rules if applicable, where it is used. You will see it in vendor master, customer master, purchase orders, and sales orders. Accounting documents like invoices, credit memos. The purpose of the terms of payment key. The terms of payment key helps SAP, the number 1, calculate the due date. Number 2, determine cash discount periods and percentages. Number 3, control payment processing and scheduling. Number 4, ensure consistency with the business agreements. So these are all the examples. Key number 001, pay immediately, no cash discount. 002, 2% discount if paid within 10 days, net in 30 days. 003, net due in 45 days. Z001, customer specific payment rule. Example calculations. The terms of payment, 2% discount if paid within 10 days. If you pay within 30 days, you need to pay the net amount. The invoice date is 1st January 2026. Discount valid until 10th January 2026. Net due date 31 January 2026. If you pay within 10th January, you can get 2% discount. So if you pay within 31st January, you need to pay the entire amount, net amount. SAP computes these automatically based on the key. How SAP determines it? The priority order. In document level, PO or invoice. Number 2, if blank, vendor or customer master. Number 3, if blank, company code default settings. Very simple meaning. Terms of payment key tells SAP how and when the vendor or customer must be paid, including discount and due date rules. The next, Incoterms version. What is it? Incoterms version tells SAP which edition of the international Incoterms rules is being used in purchasing or sales documents. Incoterms are global commercial delivery terms published by the International Chamber of Commerce, ICC. They define responsibility for transportations, transfer of risk, who pays freight, insurance, handling charges, etc. Why this version is needed? Incoterms are updated every few years, for example 2000, 2010, 2020. The rules may change between versions. SAP needs to know which rule set applies to the PO, sales order or contract. For legal and compliance purposes, to avoid confusions during logistics and shipping. So, where used, you will find Incoterms version in vendor master purchasing, customer master sales, and purchase orders, sales orders, delivery documents, and billing documents. So, the next one is example. Let's say vendor PO uses Incoterms FOB, Incoterm version 2020. This means SAP follow the 2020 ICIC rules for FOB. Very simple meaning. Incoterm version tells SAP which year's international shipping rules apply to the transactions. Example either 2010 or 2020. So the next one is Incoterms. What is it? Incoterms in SAP represent the standard internationally recognized delivery or shipping term agreed between the buyer and the seller. So the Incoterm is nothing but standard internationally recognized delivery or shipping term. Short form we used to call as Incoterms. Example include EXW, EXWorks, FOB, free onboard, CIF, cost, insurance and freight, DAP, delivery at place, FCA, free carrier, CPT, carrier paid to. These are all the examples. This field usually contains the 3-letter Incoterm code. Purpose: Incoterm defines who is responsible for transport, who pays freight, insurance, duties, point where risk transfers from seller to buyer. It helps avoid confusion in international trade. Where it is used, you will find the Incoterm in vendor master purchasing data, in customer master, purchase orders, sales orders, deliveries and billing documents. So the relationship Incoterms in SAP are generally split as part 1 and part 2. Part 1 is Incoterm code, example FOB, CAF, EXW. Part 2, which is nothing but location, example Chennai port, Mumbai warehouse, like this. So here part 1 is FOB. What is meant by FOB? Free on board. Part 2 is Chennai port. The Incoterms CIF meaning seller pays cost, insurance and freight up to the destination port. This is called CIF, risk transfers once goods are loaded. Very simple meaning, Incoterms is the standard 3-letter trade term that defines delivery and shipping responsibility in international or domestic businesses. The next field is identifier for Incoterm location 1. Identifier for Incoterm location 1 in SAP is a field used to store a short code or identifier referencing the first Incoterm location applicable to the transactions. Meaning, it helps the system link a standard identifier like a code to the physical locations entered as a Incoterm location 1. This identifier ensures consistent reporting, processing and interpretation of location data where used in sales order, purchase order, delivery, billing documents, etc. Works together with Incoterms part 1 and Incoterm location 1. For example, the Incoterm part 1 is FOB, free on board. Incoterm location 1 is Chennai. Identifier for location 1 is CHN. Purpose: standardized location references, supports EDI communication, useful for logistics and custom reporting. The next field is Incoterms location 1. Incoterm location 1 in SAP is a field used to enter the primary location associated with the selected Incoterm for a sales or purchasing transactions. Meaning, Incoterm location 1 specifies the main place where risk or responsibility transfers between buyer and seller based on the Incoterms. Where it appears, you will see the field is sales order, purchase orders, deliveries, billing documents, vendor and customer master data. So this example, Incoterm FOB, the location is Chennai port, meaning seller responsibility ends at Chennai port. CAF, location is Mumbai, seller must deliver to Mumbai port and cover cost plus insurance up to Mumbai. EXW, Bangalore factory, the location, buyer picks up goods from seller factory. So here buyer is the responsible from picking the product from the factory locations. So like this, based on the Incoterms, the responsibility will change. Purpose helps identify the exact place where logistics responsibility changes, ensures consistent legal and shipping interpretation required for international trade compliance, customs, and EDA. The next field is identifier for Incoterm location 2. Identifier for Incoterm location 2 is a technical or system field in SAP used to store a short code reference for the secondary Incoterm location. The meaning, this field contains a key or short code representing the second location related to the Incoterm, usually defined as final delivery location or destination city or detailed receiving point. It works together with Incoterm part 1 like FOB, CF, EXW, Incoterms part 2, description text, Incoterms location 1, first major location, Incoterms location 2, detailed or final destination, often required for ICC 2020 terms. So here the example, Incoterms DAP, location is Chennai, identifier for location is TC001, location 2 is Amazon Fulfillment Center Block 2. Why it exists? Some countries and shipping rules required two level of location detail such as port plus warehouse, venue plus building, city plus facility code. Instead of retyping the full location again, SAP allows a short reference that maps to the detailed locations. Where it is used, you will see this field in sales order, purchase order, delivery and shipments, vendor and customer masters. The next one is Incoterm location 2. In Incoterms, a location refers to the physical point where the responsibilities of the seller and buyer change. Location 1 usually the seller premises or point of dispatch or shipment. Location 2 usually the buyer's premises or destination point where the goods are delivered. So Incoterms location 2 is the place agreed upon in the sales contract where the seller's responsibility ends and the buyer's takes delivery of the goods. Example, if the term is DAP, delivery at place, location 2 is the place of delivery at the buyer's site. How to fill Incoterm location 2 in a document SAP system? So the field is Incoterm. Example, FOB, CAF, DAP, XW. Incoterm location is point of shipment, seller's factory or port. Incoterm location 2, destination point, buyer's warehouse, port or city. This is how you need to fill up the data. Example, Incoterms DAP, which is nothing but delivered at a place. So the location 1 is Chennai port, location 2 is Bangalore warehouse. So in SAP SD module, you enter this in the sales order shipping tab Incoterm. The location 2 field should match the delivery address of the customer or the agreed drop off point. So here you can see the difference between location and location 2. Aspect definition, point where goods are handed over by seller, usually shipment. So the location 2, points where goods are delivered to buyer, responsibility transfer. Responsibility, seller's responsibility starts, seller responsibility end. Risk is with seller until this point, depends on location. Risk passes to buyer, depends on location. Depends on Incoterms. Example, seller's factory or port, buyer's warehouse, port or city. So this is about Incoterms location 2. The next field is minimum order value. Minimum order value refers to the lowest amount a customer must purchase from a seller in a single order for the order to be accepted or processed. It commonly used in sales, e-commerce and B2B transactions to ensure profitability and manage logistics. Key points. The number 1 definition, the minimum monetary amount required per order. Sometimes instead of amount we can use minimum quantity. Number 2 purpose, ensures the sellers covers processing, shipping and handling cost. Encourages large orders for economies of scale. Helps filter small and profitable orders. Number 3, how it is applied. Example 1, minimum order value is 500. Any order below 500 cannot be placed. Example 2, 10 units. Customer must order at least 10 units per product. Number 4, difference from minimum quantity. Minimum order value is equal to based on the total order price. Minimum quantity equal to based on number of items regardless of price. Number 5, use in system like SAP e-commerce can be configured in pricing or sales order checks, alerts customer if order is below to the MOV, minimum order value. The next field is responsible salesperson at the supplier's office. Responsible salesperson at a supplier's office refers to the specific person at the supplier's side who is accountable for managing the sales process for a particular customer or order or region. This is commonly used in sales ERP systems like SAP and purchase or sales documentations. Key points. The number 1, definition. The salesperson officially assigned by the supplier to handle inquiries, orders and coordination with the buyer. Act as a point of contact for the customer at the supplier's office. Number 2, roles and responsibilities. Receiving and processing sales orders and communicating with customer regarding price, delivery dates and order status, and coordinating internally with the production, logistics and finance to ensure smooth order fulfillment, resolving issues like delays, quality concerns or returns, maintaining customer records and reporting sales performance. Number 3, usage in system in SAP. In SAP SD sales and distributions, this is often called salesperson or sales employee linked to the customer master or sales order. Helps in tracking sales performance, commissions and responsibilities. Can be used for workflow approvals if the salesperson need to authorize orders. So these are examples. Difference from salesperson to buyer's office. Difference from responsible salesperson at buyer's office. Responsible at supplier. Responsible at buyer. Manage the order from the supplier side. Manage order on buyer side. Ensures delivery, billing and order fulfillment, ensure order placement, payment and feedback, coordinates internally at supplier, coordinates internally at buyer. So these are all the responsibility at supplier end and buyer end. So the important tips, always enter the full name and employee ID if applicable in documents and ERP system to avoid confusions, especially in multi-office suppliers or large organizations. The next one is supplier's telephone number. Supplier telephone number is simply the contact phone number of the supplier or vendor used for communication regarding orders, delivery, payment or other business inquiries. Key points. Number 1, the purpose enables the buyer to contact the supplier quickly for order confirmations, shipment, tracking or issue resolution. Often required in purchase orders, contracts, shipping documents or ERP systems. Used for emergency communication, especially if emails is delayed. Number 2, format include country code for international suppliers. Example, domestic India. So we start with 044 country code and you can enter the telephone number. Example, international USA. You can start with +1. Then you can enter your telephone number. Where it is recorded. Purchase order, vendor master in our SAP system under the MM module, supplier contact list or business directories, shipping and billing documents. These are all the use cases. Best practice number 4, keep the number up to date, check periodically, include a secondary number if available, example mobile or department line, specify extension numbers if needed. The important tips. In system like SAP, the supplier telephone number is stored in the vendor master address communication. This ensures automated communications for order confirmations or alerts. The next one is our account number with the supplier. Our account number with the supplier refers to the unique identification or account code assigned by a supplier to your company. This is used for billing, payments and tracking transactions between your company and the supplier. The key points, there are four key points. Number one is definition. When your company registers as a customer with a supplier, the supplier assigns a unique account number. This number identifies your company in the supplier's billing, invoicing, and ERP systems. Number two, purpose ensures all invoices, payments, and orders are correctly linked to your company, helps the supplier track your credit limit, payment history, and outstanding balances, then facilitates efficient communication regarding order statements or disputes. Number three, where it is used, purchase orders often referenced to indicate which account the invoice should be billed to. Invoice and statements helps supplier match payments and orders correctly. ERP systems stored in vendor or customer master data, automated processing. Number four example, your company ABC Private Limited, supplier XYZ Electronics. Supplier assigns account number XYZ ACC 1023. All invoices, credit notes, or payments will reference this XYZ ACC 1023. Number 5, first practices. Keep a record of all supplier account numbers to avoid confusion if your company deals with multiple suppliers. Always verify the account number or invoices before making payments. Include the account number in purchase orders when required. Tips in SAP system like in Vendor Master Purchasing Data tab, this is often stored as a customer account number or reference. Helps automate payment reconciliation and reporting. The next field is ABC indicator. The term ABC indicator is commonly used in inventory management, procurement, and ERP systems like SAP. It is part of ABC analysis, which classify items, suppliers, or accounts based on importance, value, or consumptions. So the ABC always classify based on the items, or based on the suppliers, or based on the accounts, or based on the value, or based on the consumptions. There are different parameters to use this ABC analysis. The definition, ABC indicator assigns a category A, B, or C to an item or supplier or account. The purpose helps prioritize management focus, procurement efforts, or stock control. So, how items are classified? For example, category A, high value or high importance. So, focus, tight control, frequent review, accurate forecasting. B, category B, medium value, medium importance, moderate control, periodic review. Category C, low value, low importance, minimal control, bulk handling, low priority. So the practical example, the material laptop annual value is 15 lakh rupees. The ABC indicator is A. Second one is printer, 3 lakh rupees, category B. And third example, mouse annual value is 30,000 rupees, category C in ABC indicator. Let's say classifications can be based on monetary value, consumption value, or criticality. Example, in inventory, total annual consumption is 1 lakh units. Item contributing 70% of value is A category. Item contributing 20% of the value is B category. Item contributing only 10% of the value is C category. Usage in SAP. In Material Master MRP 1 or MRP 2 tab, enter the ABC indicator informations. So procurement and stock management. A items procurement stock checks tight inventory levels. B items standard control. C items minimal control, large safety check. Reporting and planning enables prioritizing purchase planning, vendor negotiations, and inventory audits. The tips, ABC analysis is a dynamic review periodically because consumption patterns change over time, which can change the ABC indicator. So the ABC indicator is a dynamic entity. It will change frequently. So you need to review the system periodically. Then based on the current status, you have to change this ABC indicator. A can change into B, B can change into A, or C can change into A sometimes. So you need to review periodically. Based on the current requirement, you need to change this indicator levels. The next field is shipping conditions. Shipping conditions refers to the specific items or requirements or rules agreed upon for transporting goods from the seller to the buyer. This includes how the goods will be shipped, who is responsible for cost and risk, and any special handling requirements. So the definition is defines the method, responsibility and conditions of shipping for an order. So generally used in sales orders, purchase orders, contracts and SAP SD or MM modules. So this is example. So the element is delivery items, indicates whether delivery is standard, express or partial. Mode of transport, air, sea, road or through train. Packing requirements, special packing needed for fragile, hazardous or perishable goods. Responsibility, risk, who bears cost and risk during shipment, often linked to Incoterms. Route or carrier, preferred carrier or shipping route if specified. Insurance documentations, any requirements for shipment insurance or export import documents. So these are all the key elements in the shipping conditions. Examples of shipping conditions: the standard delivery, delivered within 7 to 10 business days via ground transport. Express delivery, delivered within 2 to 3 business day by courier. Partial delivery allowed, the supplier can deliver in multiple shipments if stocks is insufficient. Hazardous material handling, special packing and documentation required. So the fourth one is usage in SAP. In SAP SD, shipping conditions are maintained in the sales order shipping tab. So they help determine route determinations, delivery scheduling and then transportation planning. Example, in SAP 10 is a standard delivery, 20 is the express delivery, 30 is the customer pickup. So the important tips: shipping conditions are closely linked to Incoterms, delivery priority and transportation planning. So make sure they are consistent across your sales order, contract and logistics documents. So this shipping condition is very important because it is linking multiple datas in your sales process. So the next field is indicator GR based invoice verifications. GR is nothing but goods receipt. Is a term commonly used in SAP material management module for procurement and invoice processing. Let's break it down clearly. The definition: GR based invoice verification means that the invoice from the supplier can only be posted after the corresponding goods receipt is recorded. This ensures the payment is made only for goods actually received. Indicator: this is usually a checkbox or field in SAP that signals the system to enforce GR based invoice verifications. So the purpose: prevents overpayment or payment for goods not received, ensures accuracy in inventory and accounting, supports audit compliances and financial control. So how it works in SAP: create a purchase order, receive the goods, which is called post goods receipt, GR. Supplier send invoice, post invoice verifications, IV. SAP allows invoice posting only in GR exist. Fifth one is payment is then processed to the supplier. So there are 5 steps. First one, create a PO. Second one, receive the goods against our PO. Third one, supplier will send the invoice. So you have to verify the invoice verifications. Then SAP allows invoice posting only if goods receipt is exist. The fifth one is payment is then processed to the supplier. So in SAP, in the PO items invoice tab, check GR based IV. If unchecked, invoices can be posted without goods receipt. So example scenario: PO 100 units of material X from supplier A, goods receipt 80 units received and posted in SAP. Invoice: supplier send invoices for 100 units. Result with goods receipt based invoice verifications. SAP allows invoice only for 80 units received, preventing overpayment. Okay. So the tips is: GR based invoice verification is mandatory for high value or regulated items, but for low value or service items, sometimes non-GR based IV is used. but most of the items coming under GR based IB. So here the key concept: term, goods receipt, GR, confirmation in SAP that goods have physically arrived at the warehouse. Invoice verification, step in SAP MM where the supplier invoice are posted and matched against PO, purchase order and goods receipt. So three-way match: SAP checks purchase order, goods receipt and invoice before allowing the payment to the supplier. So this is also very important field.